Ladies and gentlemen of the crypto space, we're live on a Monday, December 29th at 11:37 a.m. This is the last stream of 2025, and I am seated for the first time in quite some time. I don't like this one bit. I need to get back to my standing position. That's besides the point. The point of the story is we are always presented with a choice, and the choice is what we talk about. I don't sit here in my streams and pontificate. I don't tell people what my general expectations are in short time frames or even mid time frames. Hence, the chart that I have displayed currently on the screen dates back to 2007. I give these high time frames, high level observations, and these are what guide my expectations for my results. But my results aren't also what most people look for with regard to results. And I tell people this very explicitly: my results aren't necessarily monetary, directly, explicitly, but indirectly, my results, or my expectations rather, are adherence to my rules. And I've constantly, repeatedly, over and over again clarified this. Why are my expectations satisfied by adherence to my rules? For one reason above all, it allows me to sleep at night knowing that I am right. I am right because I am doing what I have determined to be right. The monetary result is a downstream, a knock on effect of my capacity to be consistent, to tell a story that makes sense, and to execute according to the way I understand things. That is such a simple thing that so many folks glance over, and they're constantly looking at their portfolio or constantly struggling looking at content on YouTube or on X to either find a reason to make a choice, find a reason to make a decision, to buy something, to sell something, under what condition. But in the end, what you have to do in order to meet your expectations is define your expectations first and foremost. And if your expectations are like mine, adherence to my own rules, you will always be successful. With regard to financial success, that's another story. That the way I think about it is a manifestation of my capacity to adhere to my rules, because I see that as a knock on effect. I see my financial success as a knock on effect of following my rules as best as possible. And I know the financial results that I've achieved over the years. And for me, that is meeting my expectations. I have met my expectations. Have I exceeded my expectations? Under what time frame is a critical thing to contemplate. Have I exceeded my expectations relative to 2016, 2017 cycle? I would have never in a million years imagined what I've achieved uh, back then. I couldn't imagine having done what I've done. Have I exceeded my expectations relative to 2019? I could have never imagined what has occurred would have occurred. Have I exceeded my expectations relative to 2021? Probably not. I would have hoped that there would have been better financial repercussions, but it's too short of a time frame for really for me to assess, have my expectations been met financially? Have I met my expectations with regard to adherence to my rules? I created my rules and my methodology pretty much in 2022, and all started in 2022, April of 2022, which not so coincidentally is just prior to 2022 tax season, as I started to think about accounting. And for me, that was one of the most important things. Once you square away, you can't really square away asset choices. And I started in 2022 to think about what I talk about nowadays with regard to the assets that we talk about. And clearly, where we are right now is a very refined subset of the entire landscape of the crypto economy. Um, and where we are now with regard to accounting, I could have never imagined I've gotten to where I am with accounting 3 years later. So over the last 3 years, what we have is this extraordinarily refined set of rules, m- a methodology for not just capital management, because as you know, on social media and X particularly, and on Discord as well, I talk about health and wellness. And I talk about mental fortitude. W- Why and how am I able to be this comfortable? Why and how do I think the way I do? It's been a path, and a path that started in 2022. So why haven't I met my financial expectations since the end of 2021? It's too short of a time frame. And that's why I have this chart up going back to 2007. And that's why I talk about 2016 and 2017 and what the market was like in 2019 leading into 2020. And that's why I compare and contrast what occurred in 2020 to now. And that receives a little bit of criticism on social media, rightfully so. But those persons providing that criticism also aren't me, and they don't have that experience from 16, 17, that perspective from 2019, and that experience from 20 and 21, and the work I've put in since 2022. So there's no way that folks can necessarily understand and appreciate the perspective that I discuss. Now, clearly, I tell the story of where I've found myself. I could tell the story of the path that I've been on from where I was to get to where I am, and folks could hear the story. But that's not going to, and that really shouldn't um, dictate a person's choices and decisions. And hopefully, very hopeful that I have impacted people's capacity to come up with their own rules. That's really my net goal. If everyone could come up with their own rules, they can meet their expectations, which could lead more likely than less likely to financial success. And that's my expectation. Adherence to my rules will lead to my financial success. And thus far, as I said, in 2020 and 2021, up until now, even, I could have never imagined achieving what I've achieved in 2016 and 2017. And 2019 was completely not even a thought in my mind. 2019, I liquidated good parts of my retirement account, traditional rollover, was 401ks rolled over into an IRA, and I paid all the penalties, and I moved X amount of capital into primarily Bitcoin. And then 2020 and 21 for myself was an experience very much akin to what the majority experience attempting to navigate the crypto space. Um, Panic, anxiety, and a whole lot of second guessing, endless second guessing, and rotation, moving capital from one thing to another because something is outperforming and what I've chosen is underperforming. And it was just this absolute shit show. And that obviously led me to 22, where I started realizing that for myself, the appropriate course of action was to think differently. And obviously, I'm the contrarian. I'm an extraordinary contrarian. I may be the most contrarian of contrarians. Clearly, I'm a reductionist, where I've reduced complicated conversations or complicated topics to the most simplest possible way to inspect them. And the combination of the contrarian and the reductionist has led to four simple rules. Rule number one, own more assets. Rule number two, know when to stop buying assets. Rule number three, fuck you, pay me. They're our most famous rule. And rule number four, don't fuck up the cash position because the cash position is what affords you time. But the funny thing is, these four rules they bleed over with not just investing, especially not investing in cryptocurrency markets, but they bleed over into just general capital management. If you're an employee and you get a W 2 and you get a paycheck and you get deposits into a checking account, it bleeds over there as well. The rationale is clear. If you have X amount of capital in a bank account, you got to manage your capital. That's rule number four. You don't spend all your money. And whether you're talking about rule number one, own more assets, with regard to a non investor, um, they might not be thinking in terms of owning assets, but they're surely thinking in terms of buying a car. Okay, fine, that's actually an asset. Buying a house, that's also an asset. Or buying shit that they put in their house or their rental apartment or whatever the hell their situation is. That is very much akin to rule number one. So, rule number two says no one to stop spending your damn money. So, you got to respect rule number two, even if you're just an employee and you're managing a bank account. You can't, because if you don't respect rule number two, no one to stop buying stuff, you're going to mess up rule number four. Clearly, rule number three is completely inapplicable to an average management of an average standard bank account for a W 2 employee. Uh, that's obvious, but that's besides the point. The point is, these rules are almost universally applicable to the non investor, but also the investor. But as I've gotten older, I've realized that it's all the same thing. And I've also, my children have gotten older. So I think about many things from a parental perspective. And probably the most important thing from a parental perspective is if you're just a W 2 employee and you're putting money into a savings account, that is parental negligence from an education standpoint. I have a decade or more before my children start to think about, um, you know, adult work, adult capital management. So I have plenty more time to continue to refine my ideologies, methodologies, my theories, and just the way I think, my philosophy, probably the best word. And I'm sure it's going to change over time. The beauty of the four rules is very much akin to just fundamentalism. They're so vague and so general, and that's why I love them so much, and that's why they bring me so much comfort. They're not specific. They're not elaborate, and they don't have very tightly um, formed constraints. They're broad. Own more assets. No one to not buy assets. What assets? And no one to not buy assets. Why would you not buy assets? Okay, maybe they're expensive. Maybe they have different degrees of risk. Maybe they're new versus old. Maybe they're tested versus untested. Maybe they fit into they have different characteristics from a business standpoint. Our five businesses that we've identified in the crypto space. Maybe they're in a particular business category that we don't appreciate so much, like category three, derivatives. I hate derivatives. I don't like them. I'm a fundamentalist. I'm a reductionist. I like the base layer. See, the 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 creation of the rules helped me realize that I don't want complexity. I crave simplicity, and that's why these base layer protocols make so much sense to me. And interestingly enough, I can go back a little further to give a little more context. So, a lot of these thoughts and the rules and the five businesses, I've always had this mentality. Even when I worked on Digibyte prior to 2019, and I wrote the Digibyte wallet for like, probably 2 years, give or take, the Android Digibyte wallet. And I always thought of it as, where I started to think of it as public utility, um, an infrastructure. And maybe I was off base with regard to it being like critical infrastructure, at least the way we talk about financial infrastructure nowadays, now that we really understand the way the global financial system works, just infinitely more compared to the way I understood it prior to 2020. But I did think in those terms, no less. A utility, something that can't be changed, something that will be there, whether folks want it to be or not, whether there's overwhelming consumption or not. It's frankly that's still the case for Digibyte. It's going to be there. It's going to remain. It's going to persist. And what becomes of it is really a manifestation of consensus. If people choose to use it, towards the end of my work with the project, we built a lot of Digi assets. And Digi assets clearly is the foundation for what they've discussed more recently in their stablecoin. And I have my critical opinion of their stablecoin product, but that's separate and apart. Um, that infrastructure will be there for years and decades. It's not going anywhere. It gets complicated, obviously, in the 2030s because of their monetary policy and their emission schedule. That's another story, but I don't. We don't need to dig that look too much further into the Digibyte from a conversation standpoint. The whole point of bringing it up was I did have these thoughts, um, this reductionist mentality uh, prior to even 2020 and 21, where I was in complete frantic panic mode, trying to figure out how to navigate what the hell was going on. What was the third? The three assets. That's an interesting digression. The three assets I chose back in 2 seconds. I must respond to the wife for fear of my life to live longer. Always respond to the wife. Excellent. Um, what were the three assets I chose in 2020 and 2021? Just for a fun 2 seconds. It was Kyber, Bancor, and Synthetics. For a while with Synthetics, it was interesting because Synthetics was the first staking protocol with an emissions. I believe that's the way I recall it. I haven't talked about this topic in quite some time, but the original staking contracts and emissions from almost all protocols were the synthetics contracts. That was for quite some time. Um, Clearly, we've evolved substantially and we diverged from those original contracts over the years, and things have become infinitely more robust. But that was the beginning, and that was a very interesting time, 2020 and 21. Aside from all the financial insanity and the pandemic and whatnot. Um, what emerged was this realization that there was no difference between cryptocurrency and economics, and just cryptocurrency is a part of the economic system and the fabric of the economic reality that we live with. And I've said very clearly that cryptocurrency is a manifestation of just a shit global economic system. If money was not was if money was strong, and we had a strong fiat currency. Is that an oxymoron? A strong fiat currency? If money was valuable and increasing in value over time, and its purchasing power was increasing, there would be no real. There would have been significantly less pressure or incentive for the emergence of these cryptocurrencies because folks would be fighting over dollars, and you didn't need this whole credit reality to drive incentives. Dollars were enough, that would have been enough, but that's not what is real. So what I've really focused on over the years is reinforcing with people that the most important thing is to accept what is, not what they want to be. Probably the best example of that is Ripple and XRP. And the difference with XRPL, XRPL is great technology. It's a ledger system. And all right, great. It has nothing to do with XRP necessarily, and the entire conversation of Swift and banks using it for cross geopolitical arbitrage or cross settlement, so on and so forth. And then what? More recently, we've had Swift come out and talk about their own blockchain work. So where the hell does Ripple and settlement come into that whole conversation with what Swift is working on currently? Um, so it's so imperative to not live in a world of what we want, but rather what is real. Where did that lead me to? That led me to the concept of dollars. It's the most important thing, isn't it? And that is a very interesting progression as well. Prior to 2020, 2019, even in 16 and 17, the concept of stable coins was just weird. Like, why would you want stable coins in 2019? What the hell do you want stable coins for? That we were in no way, shape, or form ready to talk about where stable coins have come to and the opportunity, the extraordinary opportunity that exists now because of stable coins and how the concept of stablecoins fits into the big picture. And in fact, the five businesses of crypto and my entire conversation, my entire investment methodology is completely about dollars, if you think about it, and foreign exchange, because that's really where the biggest exchange will be. Foreign exchange being the evolution of the conversation of dexes and crypto exchanges. Uh, sure, there'll be exchange of tokens, DAO tokens, and whatever tokens exist in these cryptocurrency markets. But the biggest market, the biggest potential is Forex, foreign exchange, and currencies, national currencies that are in cryptocurrency tokenized form, stable coins that exist in these foreign exchanges, these dexes, and that has the potential to be trillions. And that's the biggest business on the planet. That has the potential, in my mind, to be the biggest business in these cryptocurrency markets. Very interesting how these old ideas and these old ways that I've thought have led to the way I think now, an evolution. It's imperative that I attempt to tell you guys how I've gotten to the from the way I think in the past to how I think now, because that's the most important story. If I could tell you guys that evolution, that path of progress, progression of thought, then maybe folks can have their own epiphanies and realizations and evolutions of how they think about the things that we talk about on the stream. Um, as I said when I started this stream, this isn't about pontification. This is literally a conversation about psychology, methodology, ideology, while maintaining mental health and wellness. So, because all of this is really about survival, because the most fundamental equation still stands. The system must expand or it dies. And that really leads to so many aspects of so many things that we talk about. What is the system must expand or it dies? The amount of currency in the system must expand, or nominally current countries will not have the tax receipts to finance their debt, pay the interest on their debt. And if a sovereign nation doesn't pay the interest on their debt, you literally have a national crisis, because then their debt starts to default and the debt backs is used as collateral to take on credit. And if the collateral loses value, then you have the margin call spiral and you have your collapse of currencies. You have your sovereign crises because the debt has been turned into money. The system, the global financial system, uses debt as money. And that's kind of separate apart from hard money conversation. Gold is money, everything else is credit, because as I said, it's imperative to accept what is, not live in a world that what you want to be. If the world uses debt as money, because the world uses debt as money, and we all know that gold is money and everything else is credit, but that's not what the world does. That's not the way the world behaves. So if we can't allow what the world uses as money to significantly collapse in value, because then you get your cascading margin calls and you get your currency crises at the sovereign level, then the system must expand or you get the crises. plural, not just a single global crises, crisis, multiple crises. It just cascades country into country because every country has taken on debt from every country. I've given the analogy of the spider's web. It's all interconnected. So if a large enough country experiences a sovereign currency crisis or sovereign monetary crisis, it has the potential to cascade into everything or into every other current country that has taken on debt in that particular country's denomination that has bonds and treasuries from those respective countries. So, what does that mean? That means that Will Groman's conversation is always relevant. I don't necessarily agree with where his mind is at with regard to the Bitcoin, but his timeless story of uh, of refinancing, that at some point it all needs to be refinanced, and that's Mike Howell's story. That's all their stories. One of the biggest realizations I've had over the years is that they all literally tell the same story. All the macroeconomists tell the same story. But probably the most practical story that's also the most hated story is Raoul Pal's story, because he discusses things in terms of it's not as important to understand why the system must expand, but his realization at exponential age that he offers is that the system does expand. So we go a little bit further and we bring in the other macroeconomists to elaborate why the system is going that exponential route that Raoul discusses and depicts in his actual data. It must expand, therefore, it does expand cyclically, periodically. You literally have folks nowadays that talk about a deflationary period. And I don't see how that works. I don't see how that works, not because I appreciate or like Raoul's charts or I like Luke's story or Brent's story and Milkshake's story. Actually, Brent probably would agree with a lot of things I say because very much am aligned with his milkshake conversation. But he would say, yeah, no, uh, what you're saying makes sense. The dollar has to come down periodically, cyclically, but its destination is up and to the right as other currencies just continue to get consumed by the dollar as they are fundamentally derivatives of the dollar in so many regards. But he himself elaborates and discusses periods of dollar down, significant dollar depreciation, and that allows a resetting of global finance. But you don't see that on a daily chart of the dollar or the DXY. Um, and you could probably get much better aggregate perspective and picture than the DXY. And clearly, it's a manifestation of all cross currency pairs, but the DXY gives us our highest level perspective that is most useful. And you're not going to get it from the monthly. Look at this monthly. You go back to 2009 on this monthly perspective. What you get it on is the 6 month chart. Nobody brings up the 6 month chart of the DXY. And here is where you see back to late 1960s. And this is right up Brent's alley because this gives us that high level picture of systemic reset or currency reset where the dollar becomes cheap cyclically. And you also see that the dollar gets expensive cyclically, but it is what it is. We live in a world that we accept, not a world that we want. The dollar gets expensive cyclically, but as you can tell, the system can handle a dollar that's only so expensive cyclically. So since the 1980s, the dollar has gotten less expensive cyclically. How many times cyclically? Two times cyclically. You see it right here. Here's the 1980s, cyclically less expensive compared to this insanity back in the 80s with the Plaza Accords, and then cyclically less expensive back in 2020, ending in 2022. So this is all a period. There's literally three circles to draw. That's that's the perspective, the most valuable perspective valuable perspective that I could possibly offer you guys. And this highlights the amount of time it takes for these structural realities to play out in financial markets. Um, everything. So, and this is why it's so hard for younger generations to understand because 5 years, we're in 2025, 5 years isn't enough time. Talk about 10, 15 years to really see what's going on, 20 years to see what's going on. And since 2000, it's taken us to 2025 to see this type of structure play out, where the dollar must become cyclically less strong. And if you're younger and you're trying and you're 18 to 25. If you're 25, you were 20 in 2020. You didn't have any money. So how could you participate in that kind of market? So it's a very hard thing. It's very age sensitive to really understand what the hell is going on in these markets and to really understand the amount of time it takes for things to play out, which is why I come back to it's so critical for the smaller portfolio or the younger generation to focus on rule number one: just own more assets. Because if the 1% own 99% of assets, they're telling us the very simple equation that leads to success in the global financial construct as it exists. Just own more assets. And that leads us to where we are. Where we are is at a turning point, clearly as depicted in this chart. We've had a serious inflection in 2022 with a 6 month candle that is only rivaled by the 1980s. It's only rivaled by 1985, this blow off top in 1985. Look at that wick. That's an extraordinary wick. So candles matter. Candles matter. They tell us a story, they tell us a behavior, and a candle like that tells us an inflection point occurred. It tells us that something changed. We had less of that in 2000, which is probably an interesting thing to contemplate, but we clearly see that something occurred. You can't have that kind of change in currency pricing within a 6 month period unless something structural changed. And when we talk about these structural changes, we're talking about, especially nowadays, more so even than during the Plaza Accords in the 80s, we're talking about geopolitical collusion. And the geopolitical collusion that occurs nowadays is completely unlike what occurred in the 80s and even the 2000s. The collusion now is instantaneous. It's in cyberspace, it's in the cloud. Central banks have a capacity to coordinate with one another, unlike any of these cycles past. So things are changing. And that is our opportunity. That is our conversation. Conversation is here. Our conversation isn't what's going on today, isn't what occurred in 2025. Oh, we were in a bear market in 2025. Oh, the top is in cyclically. If the top's in cyclically, that means the dollar's going to go up. If the dollar goes up from here, what does that mean? So if cryptocurrency and equity indices uh, enter a 5 year bear market, that means literally the dollar is going to go up and to the right. And if the dollar goes up and to the right, okay, let's talk about the conversation that must be had. What countries are going to fail? And when we say the phrase "what countries are going to fail," we're talking about anarchy and chaos. Because if a currency fails, that means an economy fails, and if an economy fails, that means the businesses fail, and that means there's no employment. And if there's no employment, that means there's no tax receipts, and that means the money in that country fails. And what does that do for the global financial system, depending on the size of the respective country that is failing? That's what the dollar up and to the right means. It fractures economies. It breaks them. And that's fracturing economies, breaks them. What does that mean? That means people. And that means employment. And that means food and hunger and starvation and anxiety and violence and civil unrest. And that ultimately means one of the most important things that we understand all too well: politicians getting reelected. Politicians don't get reelected if a country's economy fails. So the votes and decisions of politicians are, from a fundamentalist perspective, centered and geared around preventing an economy from failing. That's what happened in 2020. Yellen, was it Yellen that said, "Can't go too big"? That was, I'm paraphrasing, but that was generally what came out of 2020. They the Congress was encouraged, you can't go too big on whatever package you come up with. Can't go too big. Why? Because if you didn't go big enough, it was all coming down. It was all going to fail and all going to unwind, and you were going to have your deflationary period. If the damn economy couldn't handle a deflationary period in 2020, do you think it could handle it now with the amount of treasury issuance since 2020, which is used as global money? How much money, how many dollars have been created since 2020 using the money that was created since 2020? Because if the money that was created since 2020 depreciates in value too much, the amount of dollars and currency that has been created since 2020 gets threatened. But that's, it's not what we see. The point is, we're I'm talking hypothetical when the world, if you look at global M2 supply, which is only a micro snapshot of the amount of money in the system, as Mike Howell talks about, that has been up and to the right. Even US M2 is up and to the right. All M2 is up and to the right. So the folks that talk about this deflation or the top is in, they're living in a world and thinking in a world in terms of what they what they want to be. They want, the deflation is actually really what everyone wants. Why? Because people need to accept and understand that if you want prices of goods and services to come down, you need deflation. And that's what really the gold bugs and hard money enthusiasts really talk about. Scarcity of currency leads to cheaper prices of goods and services. Scarcity of currency increases the value of currency relative to everything. But that's not the world in which we live. That's not the world that gets tax receipts to pay for the interest on the debt. That's not the real world, ladies and gentlemen. So every time, well, it's not, I don't even question my methodology anymore. You know, that's a quick thing for someone to say. Like, oh, every time you have a doubt, every time you have a, yeah, I'm beyond that. I am so beyond that, that this is what it is. This is the way the world works, and this is what gives me my comfort, that I understand the way things work. There is no, I need to find something to substantiate or justify um, my rules and how I execute. I'm at the point where this is the way the world works. This isn't the way I want the world to work. This isn't, XRP is going to run settlement across banks. I hope it happens. I hope it does. Or Bitcoin is going to become the monetary standard of the world. This isn't a hope. This isn't, I want the deflation because I want my money to be able to purchase a home at $500,000 instead of $1,500,000. I don't live in a world of hope. I don't live in a world of the way I want things to play out. I live in a world and I behave and engage with the world the way I understand the world to work. And that was my entire explanation. Tax receipts, pay interest on debt. Politicians want to get reelected. Don't fuck up your cash position, because all you need to do is survive and not be forced to sell your assets. Because when the system needs to inflate, when the money supply needs to inflate, not, no, I'm not talking about M2, not talking about dollars. I'm talking about government issued money, the government debt. When that money supply needs to expand to pay the bills, it will expand and will expand ferociously, because the governments will do what they need to do to survive, because the politicians want to get reelected. And nobody, whether you're a gold bug and a deflationist or an acceptor of reality and an inflationist, nobody wants to see chaos. Nobody wants to see that violence in the streets and people that are starving, and then you get the civil unrest. Nobody wants that. And there's no way to get past that through deflation. We are past that point of no return. By so many charts, inspection of so many charts tell us the only way to maintain social order and civility is that at some point, social civility is financed. And in this day and age, financing involves monetary expansion. You have a significant increase in currency supply, it bleeds over into all assets. The entire exercise of government becomes how to isolate that increase in currency supply, how to constrain that increase in currency supply into particular markets. And that leads me to probably the greatest thing that gives me comfort in owning what I own in cryptocurrency markets. Two factors, and then I'll hit some commentary because this is a very good monologue to end the year. Very good consolidation of a lot of thoughts. In 2000, the United States government was coming out of dot-com implosion. They did something very simple. They created a bubble in housing. Why? Because that's literally what happened. Not in a world of trying to understand what people think happened, but that is literally what happened. It was a housing bubble, which led to 2007, 2008, and they looked past all the ninja loans and all the CLOs and all the fraud that went on with the ratings agencies. Everyone saw the Big Short. Everyone knows. Everyone knows. And that is what happened, the housing bubble, which blew up in 2008. And housing is used as a form of collateral, type of money, so to speak. And that threatened the world. So what did they do? They increased the money supply. They issued all this debt. They couldn't go big enough. If Yellen was around in 2008, that's exactly what she would have said, just like she did in 2020. And they went big. They went the biggest they've ever gone in 2008. And they created another bubble because they increased the money supply and they isolated that increase in money supply where? United States stock market. And you see that obviously in the NASDAQ because if you zoom in on, let's say, the monthly, here was 2008, bottomed in 2009 ish, and just up and to the right. This is obviously COVID here. Oh, this is actually not. Here's COVID. Look how tiny COVID is in the grand scheme of things. Look at this little blip on the radar. This is COVID. And this, ladies and gentlemen, this is what happens when the United States government decides they want to try to decrease the amount of currency in circulation, not money, currency. They can't take the treasuries and the bonds out of circulation. It's another conversation. But by increasing interest rates, they the monetary policy does take currency supply out of circulation. It forces repayment. It forces the unwind of carry trades, which is ultimately how currency is created from money. So that, ladies and gentlemen, is what happens in 2022. It's what happens now if they, but that's not okay. But that's not what's going on right now. We live in a world not what we want to be, but what is occurring. They're not raising interest rates to restrict currency supply. What's going to happen next year? We literally have everyone in government right now. The United States government is pushing for lower interest rates to whatever, to fix housing, to whatever the hell the narrative they want to spin. We're not in that world of government trying to decrease currency supply. We're not in this second bubble world because this is what happens in the real world if they try and restrict currency supply. They're trying to expand currency supply. By lowering interest rates, you're going to expand currency supply. And how much debt do they need to refinance? And that's going to create money issuances as they continue to issue more money in a currency supply expanding environment of lowering interest rates. That's going to accelerate exponentially the money supply the currency supply inflation process. Now, take note as I end the year in 25 how careful I try to be when I talk about money versus currency. This is the time to be comfortable. This is the time to own more assets. This is the time to try and reframe the depreciation, principal depreciation you've experienced post 22, and what your portfolio is now worth. And it's time to try. Now is the time more than ever to put things into perspective, to find that comfort. Now that's going to be hard for someone that had just invested in 2022, and the reason that's hard is because 3 years seems like a long time. You're 20 years old and you were 17 when you started investing, and you've just lost money the entire time. Or you're 23 and you just got out of college and you just lost money the entire time. Without that perspective of prior to 22, if your entire perspective is 22 to now, it's just been a bear market, and you're like, oh, the top is in. You got folks screaming the top is in because of whatever. But I just described why the US government must increase the money supply and why the interest rates leads to an increase in currency supply. And if you're increasing the money supply and increasing the currency supply simultaneously, oh dear Lord, that's not the end of a cycle, that's the beginning of a cycle. And I'll go back to the 3 points now. And one is that's why the perspective is so invaluable prior to 2020, 16, 17. You have to understand where we came from to understand where we are, to even begin to fathom where we're going. And then the other 2 points are the bubbles. In 2000, they created the housing bubble, which ended in 2008, 9 ish. Then they turned that into the equities bubble from 2009 to basically 2019. Okay. That was, you're not going to see it necessarily here because they intervened in the market like never before. Okay. This is why the history is so important. This is why I try and talk about the history as much as I can. What happened in 2019, ladies and gentlemen? Nobody talks about this. September of 2019, the standing repo facility, not the reverse repo facility that everyone's talked about since 2020, whatever. The repo facility, intrabank lending froze. And this comes back to really a conversation that is a more common talking point, bank reserves and the limit of bank reserves. That's why Powell every now and then talks about, ooh, bank reserves are okay. We're okay on bank reserves. Because if the bank reserves get too low, the banks don't have the bank money because bank reserves are bank money. They don't have a capacity to do business with one another. And the standing repo facility that launched in September of 2019 by the Fed was to bail out the banks, because if the banks aren't lending to one another, the whole system fails. The banking system fails. The United States banking system failed in September of 2019. And everyone, all they do is think about March of 2020 was a crisis, was the pandemic. Meanwhile, the United States banking system failed in September of 2019. Nobody frames it like that, but that's what occurred. If it was left up to the banks, the interest rates, the interbank lending interest rate, the repo rate, the banks wouldn't have lent to one another. And if the banks aren't lending to one another, how do you send a wire transfer from one bank to another? Nothing works. It just stops. And you have a crisis of some kind. And what kind of crisis is another story. You have to let it play out to understand the implications of the monetary implications, the financial implications of what crisis that would have been. But they intervene, and you don't even see it on the chart. You don't even see September. Well, you kind of do. You have to go in a little bit more granularly. Go into the daily. Go back to 2019. Do you see it? Maybe Nasdaq isn't the best chart to see. September of 2019. Not really. Well, it's a mean regression. Yeah, we have to zoom in just for the fun of it. May, August. Here's September of 2019. Click this guy. What did you get in September of 2019? A 200 SMA mean regression, and that was a big mean regression. Look at that. You gave up all the gains between June to September, June, July, August, up to 4 months worth of gains in days. That's a big deal. That's a tremendous amount of volatility. And then the volatility continued until October, a whole month. And then the repo, the banks were working, everything blew up, and then you had obviously the pandemic, and That's what leads us into more of our recent conversations that people are more familiar with rather than September. Nobody talks about September. Everything looks so big. Look at this. Look how big it looks. It was such a big event. And then you zoom out and you're like, oh, not such a big event because it just kept going. And then 2025, big volatility at the beginning of this year. No one talks about March of 2023. March of 2023 was the bank failures yet again. And you had the BTFP program that bailed out the banks yet again. Why? Because the money supply can't decrease, the currency supply can't decrease, otherwise you have crises. And at some point they will finance social stability. Ladies and gentlemen, let's do some commentary. Let me see if I could help you guys and gals out with some questions. That was a nice monologue. That was a 1 hour monologue. All right, that beats my record. That's my record for 25. Scorpius, hola, buena tarde. Arrow, my friend, good morning. Last rational dose of the year. That is right. Yams in the house. Good morning, chat. Got to get that rational dose. Morning, Cap. Much a pleasure, as soon always. What exactly is the tax advantage adding to a 529 account? Um, I don't know. I don't add to a 529 account. What is it? You're able to lock in tuition to a state university. I think that's what it is. Lock in tuition to a state university. But my mind, when I think from parental perspective, I don't necessarily want my kids getting a traditional institutional education at a college, and I will absolutely in no way, shape, or form encourage my kids that that is important. I have a traditional bachelor's degree, bachelor's education from Hofstra University on Long Island, Bachelor of Science Electrical Engineering, minor in mathematics, and it was useless from a career standpoint. Was it useless from an education standpoint? Probably not. I am who I am because of my experiences. I believe in that kind of statement. Um, but I that is not where the world is, especially with the AI and robotics conversations going on. I don't believe they could be whatever they want to be. Fine, if you want to, it's not fine. Be whatever you want to be. Isn't everything changing with regard to law? Like we get a lawyer with AI that could basically almost practice law at this point. What's it going to be in 10, 15 years? Oh my God. Or doctors with regard to robotics. What the fuck? What an education is completely changing. What employment will be. You know who talks about it the best, and one of the few people that talks about it is Raul and his channel and people that he talks to about the 2030 horizon. There's a horizon coming in 2030. Once you get past AGI, once you get past not even AGI, literally just the progressive advancement, the progression of what's occurring with the LLMs and the intelligence that's in these models. What kind of education do people need? I mean, clearly there's value in a traditional education, but traditional education is designed to make you a well-rounded person, give you experience. I sure as hell don't want my kids having a college education merely for the social experience. I don't give a shit about that. Um, but is that valuable? Probably. Is that necessary? No. Is it good? Some arguably yes. If you don't know, some people need to get things out of their system. Oh, I need that social experience. I don't know. That's complicated. This is a life experience type of conversation. So I don't know. All I know is from a parental perspective, I will in no way, shape, or form force my children to go to a traditional institutional college for an education. They're very welcome to go to a trade school, and I'm sure they'll be very well off. I often tell younger people in my family, literally just skip college, and if you're making 50 grand a year at, at whatever you're doing, come to me and I'll help you manage that capital, and you'll be just fine by the time you're 30. And that's based on the way the world works, the way the world currently is. Will they miss out on that social experience or that traditional education that turns people into what they may be? Yeah. Is that a luxury? Probably. Can we all afford luxuries nowadays? Not necessarily. So these are a lot of very philosophical questions. Very important question that you asked, which leads to the philosophical questions that I ask. I always debate holding capital myself versus allocating the 529s for my kids. Same cue with regard to IRA contributions. So me personally, I am not a fan of equity markets. I'm not a Bitcoin maximalist in so many regards, but I am a fan of the idea of asset ownership and not your keys, not your crypto type stuff. And I don't like the idea of accounts with financial institutions. Clearly, I have accounts with financial institutions. I'm in my 40s. I'm an old man at this point. So, and I did corporate work for better part of my 30, all my 30s and the better part of my 20s. So I had all those 401ks turned into rollover IRAs and moved money into Roth and whatever. And it's all stupid. You know why it's all stupid? Because it's all the stupid system. And it leaves me so fucking angry. These accounts and these rules and the SEC and the bureaucracy. Then it leads us to the entire current conversation of the bureaucratic state and taxes. And it's all disgusting. The system of politics and NGOs, and it's gross. I hate it. I don't want anything to do with it. So I feel so, and that's the contrarian in me. I'm so much more comfortable with the concept of having my own assets. I own my own assets. I am in control over my own assets. And I don't have some stupid company with some stupid bureaucracy following some stupid rules from a stupid government in control over my assets. And to me that's so refreshing. So I am overwhelmingly accepting of the volatility of the cryptocurrency markets as compared to all the stupid shit people um, instantaneously accept when they have a brokerage account. They go, well, I have a brokerage account. Yeah, with a company that has different incentives and has products and ETFs that follow SEC rules that report everything, rat on you for everything to the government. And then you have the government involved with the rules and regulation. It's just gross. I'm so past all of the bullshit that most people just accept. So past government and rules and regulations. I'm a I'm a political I'm politically neutral in so many regards, liberal in many regards, especially with regard to like medication and substances and whatnot, and with regard to health and wellness and peptides. I've mentioned that a couple times, but I am overwhelmingly financially conservative. Founding fathers, small government. That's all me. I can't stand government. I can't stand that. I can't stand it. So I just so when I hear 529 and I hear IRA and I hear brokerage account and I hear I'm disgusted. I'm nauseated. So that's the end of me ranting. Good question, Arrow, as always. Hola, Capitana. Nasset, buena tarde. Has your thesis regarding crypto businesses outperformed, out, business outperformance ever had a time-based component? No, Uh, my mentality doesn't work with regard to time necessarily. Let me explain the way what gives me the comfort that I have when I talk to you guys. My mind works with regard to inevitability. There are things that are inevitable based on the progression of events. The things that I see are inevitable are the things that I appreciate the most. Now, there's a time-based component, meaning, all right, when? But that doesn't play into my decisions necessarily. I am very comfortable with inevitable, meaning I will do things because I see them as inevitable, not necessarily factoring in too much about time. Time is just emotions and a capacity to have patience. And I am the captain of patience, aside from the captain of rationality. I have infinite patience. I will wait however long is necessary to see what I see as inevitable play out. I do not care how long it takes. For better or for worse. And that's why rule number 3 is so important. Fuck you, pay me. Because if I have to wait however long it takes for something inevitable to play out, better pay me in the meantime so I can not mess up rule number 4. Okay? I hope that helps clarify a little bit of my mentality. A few years ago, everyone thought 2025 would be the year. Well, it hasn't been the year, um, but t to that, I go back to what a lot of people look at with regard to the move indicator. I've had folks say, "What is this indicator?" Mike Howell understands this indicator. He's a pretty prominent macroeconomist, manages probably a fair amount of capital, and provides very valuable, very appreciated research data. And to me, this chart means everything. And to other folks, they may be like, "Oh, this chart doesn't mean shit at all." But this is the volatility of money, and I just had an entire hour-long rant about money and how money creates currency and how um, money isn't what people want it to be. It is what is, and the money in the system is the government's debt around the world. And this is probably the best data point we have on the volatility of money, and the volatility of money plays into the capacity of money to print currency. And that people need to understand the mechanics of the Eurodollar market to understand how that works, which is a topic of conversation which we've discussed. So 2025, the volatility of money was still above a very significant threshold. And I like my lines. I put lines on this chart. I put pretty boxes on this chart, pretty colored boxes on this chart. So this is maybe an average line. This horizontal line is about average right down the pipe, going back to the early 2000s. And it is at the bottom of this inflection point in 2003. And above this line is clearly bad. Why? Above this line was 2008. This is very, very bad. Things were bad in the economy. Above this line, this green horizontal line right here in 2020, things were very bad. They're very bad in the economy. Above this line in 2022, when the Federal Reserve decided to try and remove currency, dollars from supply, it was very bad. Things were very bad in the economy. Below this line, things were very good. Good with regard to asset pricing in particular, amongst other things periodically. Clearly, the 16-17 cycle in crypto is in here. It's below this line. And clearly, when you got below the 200 SMA on this line, things were very good. Things were very good in the crypto economy. 16-17, there was a significant increase in currency supply globally, and you had significant malinvestment and outperformance in cryptocurrency markets, 16 and 17. And clearly, when things in 2020 got below the 200 SMA, things were very good with regard to asset pricing. Let's put some circles on the chart. 16 and 17. 16. Nope, I don't want to expand it. I want to move it down. 16 and 17. Let's make it smaller. And then we could go like this. And we could put another circle right here and make it smaller. 16 and 17. A little bit bigger. Things are very good. And where are we right now? Very below the 200, significantly below the green line. And my view, my perspective is this is a forward looking indicator on the capacity of money to print currency. Why? Because it takes time for the system to be like, all right, fine, we could handle this money. This money is now palatable. This money is now less volatile, which plays into stupid banks and their regulations and their underwriting. And it takes time for the volatility money to filter through from the executives and the underwriters to the bankers. Because once the bankers at the end, they're the salespeople. The banker's just a salesman, and they sell currency. And how do they sell currency? They accept money, they accept collateral. So if I have a house or I have $1 million worth of 10-year United States government debt, I could go to the bank and be like, hi, I have money. Can you give me currency? What is a HELOC? Home equity line of credit. What is a mortgage? You give the bank your house, you give them the money, giving them the money, and they're giving you dollar currency. Okay? So it takes time for the volatility of money to filter through from the stupid bank executives, those people that get paid stupid amounts of money, all the way to the stupid underwriters, to finally get to the salespeople. And the salespeople, that's when you are driving past the bank or you see an advertisement. Oh, interest rates are coming down, and here's a 2% bonus on your mortgage. Oh, here's a deal. Here's a sweet deal. Sign up now for this mortgage, and we'll pay your interest for 5 months. Okay, these deals, salespeople, and that's exactly what you see at the car dealerships, right? Right? Come on. So that's why I see this as a forward-looking indicator. It makes so much sense to me. How many times do you see the deals at the car dealerships? Take out the 0% financing, or we'll pay your interest for 6 months. So it takes time for the volatility of money to filter through to the salespeople. So that's my opinion with regard to why 2025 just wasn't what it was. I wasn't focusing and reinforcing how significant the volatility of money is. Maybe I was, and I was like, "Oh, we're finally coming off this extreme exuberance." But I got to remind myself that in 2020, coming off that extreme exuberance was historic monetary and financial intervention. So this was a little bit more organic. The difference is it was basically financed by the reverse repo facility, and it took time for all that to just bleed out. But now we're getting back to an accommodative volatility of money, which will play into the capacity of the system to just exponentially increase currency supply. My opinion. Concerning big weekly payouts consistently, listen, weekly payouts. This plays into rule number four and the capacity to execute rule number one, and it leads into our capacity to respect rule number two. If you get, and this plays into very simply prosperity versus austerity. We make this goes back to all the way our story of pizza shop. Buy a salary. Listen, you got a job, we make money. Most people live their lives like that. We have realized that you could purchase a salary. Pizza shop story. If your salary that you purchased is being less productive rather than more productive, it's a period of austerity. If your salary is producing more money, you have a capacity to make better decisions, more decisions, execute rule number one, reinforce rule number four, accumulate excess capital so you could respect rule number four better during tough times, savings account, so to speak. Um, that's a period of prosperity. Prosperity uh, leads austerity. You're prosperous before things get tight, and then austerity leads prosperity. That's the cycle. You have periods of prosperity and periods of austerity. It's just literally like a sinusoidal wave. It's just up and down, up and down. So what matters is how you prepare for austerity. And what matters is how you prepare for prosperity. Clearly, this is a period of austerity, ladies and gentlemen, ever since 2022. And nobody buys the bottom. So we've been preparing through a period of austerity for a period of prosperity. That's my general opinion, and that's why I'm so comfortable. My general comfort level also comes from my capitalization in 2019. As I said, young folks are getting into markets, and the last 3 years have been just obliterated. But being in a market for myself since 2019, I know how much capital I had in 2019. I know how much capital I had at the end of 2021. I know how much depreciation, how much bullshit money was evaporated from 22 to now, which leaves me with, okay, how much is my real return since 2019? Am I satisfied with my real return since 2019? Yes. Am I satisfied with the capital, the evaporation of capital between 22 and now? I could have done better. So I didn't handle the period of austerity as well as I will in the next cycle, so to speak. Am I overwhelmingly satisfied with what I've done since 2019? Extraordinarily. Could have I envisioned what I've done since 2016, 2017? Never could have imagined it. Never could have imagined what occurred since 2019 either. And frankly, the most exciting thing I have since ever is what happened post 22 with the accounting. That accounting work is what has me most excited because I'm so exhausted and nauseous and done with government bureaucracy. It's beyond me. I have no faith in government. It just everything about it nauseates me. So that is probably my most interesting work. It's not even the capital management. I've optimized the capital management, but it's the accounting that makes so much of a difference in my mind that that's leaves me the most satisfied. That's the amount of work that that's the work that I put in that leaves me the most satisfied. In 2010, dollars was going up and to the right, and markets are going up too. So if we see dollar going down, respecting this 20-year cycle, no, not 20-year cycle. The cycle is expressed in the DXY, and the cycle is expressed on the move indicator, as well as interest rates, as well as U.S. government debt refinancing requirements. Markets will go up even more than before, right? Or am I missing something? But generally speaking, that's what I wouldn't do 20-year cycle. I wouldn't talk in terms like that, but I will say that my general expectations are the market is our market of choice is where the next bubble is. So I said in 2000, they had the real estate bubble. Then in 2009 to 2019, September of June 2019, you had the equities bubble. And clearly, things have bubbled in equities since 2020. But my general expectation is we cannot have a bubble in equities. We cannot have a bubble in real estate. The general public will not accept it. Okay, this is probably the most comforting thing of my general expectations going forward. There is absolutely no way, shape, or form the US population is going to accept a doubling of real estate, a bubble in the real estate market. There will be absolute chaos. There is no way, shape, or form that the US population is going to accept 10x in equities. It's just, it'll be disgusting. People will just be, they'll be like I am now with regard to the US government, exhausted and nauseated. And they will be angry and it'll probably lead to civil unrest. They're not going to accept a 10x in equities. You know what they will accept? They will accept 100x in crypto because we've seen 100x in crypto. And there's been no bubble in crypto as compared to housing and equities because this market didn't exist prior to 2020. That's why it is so important to understand the history. There was no financial economy in crypto prior to 20. None of this existed prior to 20. Crypto was a different word prior to 2020. But now there's economics because there's currency. Now there's five fintech businesses: foreign exchange, credit, derivatives, liability financing, and liquidity financing and liability printing. Five fintech businesses of crypto. There was nothing prior to 2020, but now we have a market, a global market, an emerging market is a word I've used. It's a different world compared to prior to 2020. And now this is the market. This is the only market that remains that could potentially have a bubble. And why do you think the US government is focusing so much on all the rules, the IRS rules and the taxation rules through the cryptocurrency exchanges? They're going to fricking bubble the shit out of the cryptocurrency market, and they're going to use it just like they use the real estate market and the equities markets to pay the interest on national debt and other fiscal responsibilities vis-a-vis taxation. It's just, to me, this is just obvious. There's no other choice. The general public's not going to accept the bubble in real estate. They're not going to accept a 10x in equities. It'll just be other chaos, and that's my perspective. Happy Monday, Brian. Much a pleasure. How are you? Nearly 3 years seems like a long time to sit on convex position. I'm nowhere near 20 at this point. 3 years in my mind is nothing. And we got it wrong over the last 3 years. And I surely won't get it wrong again if we see the next 10 years, because whatever, next 10, 20 years, we're going to be around, we're going to be here. If we're healthy, we'll be here. So we'll have 20 years more data on the move chart. So we'll have much more context and we'll know with much better degree of correctness when the system is giving us austerity versus offering us prosperity. So we could have done much better over the last 3 years. That's the takeaway. Not that we're wrong. We weren't wrong with regard to where the next bubble will be or what the appropriate investments are. We were wrong with regard to timing. And for me, I'm okay with that because I have my 2019 perspective. And I know a lot of folks didn't get into markets until 21, I believe that it's a time frame for yourself as well. But I do have my 2019 perspective, and for me, um, that I'm comfortable with the results since 2019. Hope that helps and doesn't disappoint. But I think the charts, I think the data looks fine. I don't think we're at a top. I think this is where people have. It's exactly what I said in the title. That's exactly what I said in the title. You have to choose. Now is your time, ladies and gentlemen. It's always darkest before dawn type statements. Austerity precedes prosperity, and prosperity precedes austerity cyclically. And this is where we are. And now is when you make your choice. I don't have, it's not even that I doubted for a second. This is my choice. This is where I am. This is who I am. Everything I've done and everything I say is a manifestation of what I understand. And this is my choice. Hope that helps. What are your thoughts on the growing centralization of Bitcoin? I don't like it one bit. It's not where, so it's not what is right now. It's growing. And there's all the conversation about, the security budget versus emissions. And at some point in the next 100 years, they'll need to increase inflation. I don't know. Because how much it's the inflation that pays for the mining, and it's not the transaction fees. And clearly, that's not going to work in 100 years from now. So um, it's not concerning because of how far off the conversation is. Um, Nations, companies owning more and more. From that perspective, that's another story. It to me, and the way I engage with Bitcoin is as cash. It's effective as cash. And Ethereum's growing on me as a cash, but not yet. Just for me, I define cash, which satisfies rule number 4, don't mess up the cash position, as Bitcoin and dollars, which are stable coins. Hope that helps. Also, good morning, chemistry. Much a pleasure. Last question. I'm going to wrap it up. This is a very long stream. End of the year stream. You guys get a little extra today. Thank you for your thoughts, Captain. Rational and wise as usual. I hope you have a great end of the year with your family. I very much appreciate the kind words. I hope everyone had a good year. And that's if you were financially successful or not. I hope you grew with regard to your capacity to manage finances. I hope you grew with your capacity to manage your health and wellness. I hope you're in a strong position with regard to your family. And I hope that you're above water. I hope you don't owe too much debt. I hope you could take care of the bills and take care of your loved ones. I hope the best for everyone. I and I know that in the end, all I can do to potentially help is not sit here pontificating like so many god awful content creators. The extent, the very best extent of what I can do is tell a story that could help people think a little bit differently, be a little bit more contrarian, and hope people realize that you have to make a choice. And I sleep comfortably with my choice. And remember, at the end of the day, you have to find what allows you to sleep at night. Thank you all for joining me in 2025 and all these years prior. It is Monday, December 29th. I wish you all a wonderful new year, 12:55 p.m. in the afternoon. 222 people made it to the end of the stream and are now that much more rational because of it. Take care of yours and take care of yourself and your family. And may the new year be full of prosperity and not austerity. See you all soon. Peace.